Your markets news now. Asian markets plunged in today's trading, taking their cue from the performance out of the United States market. They fell by a greater degree on fears relating to the implications of the US's latest announcement around import tariffs targeting China with an additional 10% over and above the additional 10% levied at the beginning of February. The Nikkei share average declined by 2.88%. The Hang Seng Index lost 3.28%, while the Shanghai Composite Index fell by just shy of 2%. US markets took a tumble in yesterday's session. This as investors got increasingly nervous upon confirmation that the US administration would be going ahead with the 25% import tariffs on Mexican and Canadian goods effective from the 4th of March. The tech counters were the biggest losers, with Alphabet falling over 1%, while Tesla slipped further by 0.8%. The Dow Jones Industrial Average declined. The Dow Jones Industrial Average declined by 0.45%. The S&P 500 fell by 1.6%, while the Nasdaq Composite Index ended the session 2.78% in the red. All right, looking at our local indicators, we see that the all-share index remains in the doldrums. It's down 0.6%. In terms of our currency, we see that the rand is trading at 18.51 against the US dollar, 19.24 vis-a-vis the euro, and 23.32 against the British pound. In terms of our commodities, we see that gold is trading at $2,861 an ounce, platinum at $941 an ounce, while Brent crude oil is trading at $72.91 a barrel. To unpack the market for us, I'm joined now by Warwick Lucas. He's the head of private clients at Vunani Securities. Thank you very much, Warwick, for joining us. So Asian markets look particularly rattled today, and I suppose it's because a number of them are major exporters, and Trump's moves could well spell the beginning of a trade war.
Yes, I think it's certainly a very big concern for Asian markets. I mean, in terms of the economies, they're very much a tail on the dog in some ways, in that they're very dependent on being sure that they have somewhere to export to put it very simplistically. So they operate on thin margins, high volumes, and when there's talk of tariffs in the room, they are particularly vulnerable because of their numerics. Any kind of disruption can really set them on edge. And I think it's a case that, yes, I mean, we need to actually see some kind of result to the trade negotiation. So, hence I think a lot of the nerves, even if it's not necessarily justified, is still precautionary and, in fact, well, almost inevitable, because we need a resolution now to the trade issues that Trump is rather unsubtly raising.
So on a day like this, one would expect safe haven assets like gold to be having a good day. And already we see that the US dollar has strengthened. That currency tends to be seen as a safe haven currency. People jump into dollar assets for safety. So with things looking, like they're going to get more difficult from a trade perspective, what's the outlook for emerging market currencies like the rand?
All right. I think at times like this, you tend to see the market adopting relatively simplistic approaches, such as risk on, risk off. So one example might be, well, the dollar is strengthening, and that, by the way, is a tendency that you tend to see in any currency which is threatening to bring on tariffs. And the net result of a dollar strengthening would be the likes of gold going weaker because of that's how it's priced. I think in terms of emerging market currencies, well, that's a bit more of a tricky one. But on the whole, an increase in risk means that the risk of debt held by an emerging economy does rise, and therefore there is again a sense of more risk off. I think in terms of issues of interest rates, I mean, we're not really getting any clear guidance on where the US is going right now with those. I mean, the Fed has is more or less looking like it's in a kind of a pause point. So that's not contributing to the issue of, well, all emerging markets have lower debt costs and so on. And that's one thing we'd want to see for emerging markets. I mean, high debt costs in the US do cost worldwide.
Yeah. Very quickly, let's take a look at Northern Platinum. They released their half-year results, and like many other PGM players, their numbers not looking so good. Revenue down over 3%, headline earnings per share down just shy of 50%. They managed to give shareholders, a few cents in terms of dividend, but again, not really doing that well.
Yeah, so I think in terms of the product basket, I mean, rhodium was reasonably steady, platinum steady, and palladium prices were down on the year. So overall, you saw there that their revenue was down 3%, operating profit down more than half. And I think it sort of highlights the kind of very low margin business that you have here. So, I mean, they have a slightly lower revenue. Their normal cost of sales, which would go up with inflation and so on, say up by 6%, and that created a tremendous squeeze on profitability. So I think in the case of Northern, I mean, they're obviously hoping that they can see some decent rises in the price ahead. Otherwise, they're going to have to start cutting into the business to try and balance things out again. So we certainly need to see a bit of global growth for them to refire some profits there.
All right, Warwick, we're going to leave it there. Thank you so much for your time. As always, Warwick Lucas, he's the head of private clients at Vunani Securities.